Very good morning and a very warm welcome. Yes, Giriji. Right. So we've got some students who have caught up and come first time today in so many days. They've been busy earlier. They're saying, "Welcome, Rahul. Welcome, everybody." So today there are certain interesting things to discuss. What I personally feel, and in the volatility in the last 2 days we have seen, two trading sessions we have seen particularly. I have got a lot of students who have done well in this volatility. At the same time, there are certain students who had certain questions. So the question is always around, okay, this is unprecedented. The value of the options are unprecedented. The movement in this, in each and every ticket, each and every correction has expanded in size. So there are a lot of questions regarding the volatility. From where I look at the markets, you get a good entry position, get a good opportunity, get a good trade or not, there are always things to learn from in the market. From where I see it, if some movement does not make me money, then it certainly does give me some sort of learning. And this learning experience will help me capture certain movements the next time. Maybe it will help me to recalibrate my perspective with the markets. And I feel that is as important as anything else. So, sir, what are the important factors I should be pulling out from my recent experience and study? What are the factors? Now, as we discussed, and as I've told you in class also, volatility means variance. Volatility means the standard deviation. In finance terms, the standard deviation when it is higher, the volatility is higher. The market can be going up and it can be volatile. The market can be going down and it can be volatile. We see the same impact happen on the implied volatility also. That the implied volatility has seen to be going hugely spiked up with powerful up moves also. But as a general nature of the market, as a general nature of price movement, there has been and there will continue to be the higher level of volatility when it comes to the downtrends. Okay, there'll be a higher level of volatility that comes to downtrends. There are certain things which I advise that when you're trading, when you are in the mode of trading, in the class, I've always told you, you have to pick up that style and that, what matches with your DNA when it comes to the markets. And in these times, it can be a bit confusing what matches with your DNA, what not. When a strong down move has happened after such a consolidation, the few common things which I see happening, this is something which is very common. Okay. And you can pick up, we'll do this little study. You can pick up the, the factor that yes, whenever this has happened previously, say for example, when I'm looking at the chart of Nifty, when something like that has happened earlier, say over here, okay, when in September 2019 we saw a huge big move, or when something like that has happened over here in these areas, okay, or whenever these big moves have happened, when high volatility has showed up, what generally happens? And when I'm talking about high volatility, there can be two things. One is that there is a very clear and a very certain amongst all the Nifty 50, all the FNO stocks, all the stocks largely. There's more or less a very clear idea. This is the general pattern which is going on, the general distribution which is going on. So, for example, back in March 2019, if I go around this area, there was a general consolidation, which was accumulation going on in a lot of stocks. And then an up move happened. Okay, there was not any sudden news. There was some reprise. There was some reprise with the war scenario that could have come out. Okay, but there was not sudden news, and there was such sustainable up moves. But here there was sudden news. Here there is something sudden which is happening this phase of the market. So when there are certain phases of the market where you don't really see that all the stocks are pointing out on the same direction, and there is a volatility. It is just like you have muddy water, a glass of muddy water or a bowl of muddy water where the mud is settled down, and then you put your finger in and you just you know touch the mud and just move your finger around, because then the entire soil starts or mud starts dissolving in the water, and then it takes some time back to settle down. This is the nature of markets I, through my experience and observations, have seen. So, for example, when this strong up move happened over here, there are a lot of stocks which actually went up because on that day or during that couple of days period, a lot of stocks did some obnoxiously big moves, made some obnoxiously big moves. We take an example of L&T. These were the obnoxiously big moves which happened on L&T in the month of September. What this was exactly for the chart of nothing but a very strong pullback which happened. And then later on, we see lower lows being made on the weekly chart. Point to be noted that similar things may be happening on a lot of stocks that have very strong long-term trend. Okay, so if I take something like the Apollo Hospital, then for these stocks knee-jerk reactions. One stock which has shown us that it is going back strongly up again, Bajaj Auto. This day was just a knee-jerk reaction. Getting the point? So these stocks, which are already in very strong up moves, they settle down first and they regain their up move. They start riding, the race again. They start riding the back of the horse which wants to come first. These are certain kind of moves that happen. And because Nifty and Bank Nifty for that matter, the volatility is not something which is going to go away like this. And neither is the direction which is caused by the volatility, because this volatility may have not been unprecedentedly big, but it has caused the inertia of motion. So there's the inertia of motion. There could be corrections, there could be anything, but that motion likely to continue is likely to continue. So there will be a majority of stocks that will show us patterns of distribution, or the fact that they have come out of patterns of distribution. Like for example, look at Punjab National Bank. There is a very clear support area on the weekly and the daily chart, which was at 58. This is broken. We have been speaking about this stock. We have been speaking about this stock also on our hourly chart from these areas. Okay. Similarly, we have got stocks like SBI, and this is a common theme which I'm seeing in the PSU banks. PSU banks, common theme which I'm seeing. Maybe somebody might come and say there was nothing in the budget which was substantially helping the PSU, whatever the case is. I'm not a fundamental person. NINF. Those things do have their own place, but the whole thing is that what I'm seeing on the chart is pretty clear. And when these distributions are breaking out from, these are the stocks which are going to be the front runner in further downwards. Whereas stocks, as we just saw Pidilite, we saw Bharti, we saw Bajaj Auto, we saw Hindustan Unilever. Now we see Hindustan Unilever. These are the stocks. And Hindustan Unilever again backtracked onto getting the new lifetime highs. Okay, these are the stocks which are likely to participate in case these are the front runners when the market is showing us pullback. So something like a Hindustan Unilever going up 5%, and some other stocks which were correcting from their downward movements. All of those stocks have been given some positivity to Nifty, whereas a lot of stocks have continued going down. So keeping an eye out on which are the stocks which are regaining their upward movement, and this was just a knee-jerk reaction for it. That is something very important. On the other hand, stocks like ITC, which we discussed yesterday, okay, stocks like the PSU Bank, those are the stocks which are likely to go down further. Something like Bosch, something like QPL. These are the ones which have broken out freshly and they continue to go down. They're likely to show some more firepower, which had already got a bearish undertone on the daily chart. Now, these are the front runners of the downward movement. Suppose what happens, L&T also did. Suppose what happens is that in case the market, starting back from the chart of Nifty, if I have to go to the hourly chart, if I have to see that this market is not ready to go down, if the market is not ready to go down, and every kind of this move was actually just a false alarm, which is less likely. But if there has to be a pullback, or if there has to be a range in which the Nifty moves, suppose Nifty starts moving in a range for some time. Again, one of the nature of volatility is that it is settling down again. What happened on the Nifty chart here? The volatility ended up settling down and then moving with a different pace and a different slope. You did not have such 90-degree movement again. You had a different slope of movement. Similarly, it's not necessary that this 90-degree movement will be continuing again. So what has a trader a better way to a more conservative way? There is no question of, okay, is this safe or not safe? Amongst the most volatile times, sometimes you get the biggest of the opportunities. But what I say is that having the thread of attention, yet pulling back a little bit, can be very helpful. If there's a thread of attention that, this is the scenario and I'm tracking it. But when it comes to the actions, then I'm not in a hurry. Then it is always better and it always gives me more leverage psychologically to look for the better opportunities. But the point is, before those better opportunity comes, there is a tendency for traders to get lulled, to get allured, and see the market showing action. And when the market is showing action, they want to participate And these actions are not going to help you just because for the heck of it we are participating. Getting the point? So wait for things which have some meaningful aspect. Because even if you have to sit through a movement, sit through a trade, every little tick, every little correction, every little movement in your direction will have a magnified size as a higher standard deviation now dominates the market. Now, this is what the picture of Nifty looked like yesterday. And it did make a new small low and it started moving sideways after a little pullback. Certain things which I notice, breaking out the 5-minute chart because the volatility is such that I can. Certain things I notice are certain important levels which I have to mark out. So 834 yes has been important previously. Let me mark this out. 740 to 745, 750, this zone looks interesting. This is a point from where a lot of sellers are pushing the market down. A lot of sellers are pushing the market down. And if we are able to go above this or open above this and rest a little bit, then it can be an opportunity to see the power of the participate with the power of the bulls. On the other hand, where the daily chart is dominant, I'm not trying to say that you have to go against the daily trend, but in such volatility, even a pullback or correction can be big. So if there's a range which is, this 15-minute chart, the 5-minute chart, 10-minute chart, the range is itself of 100 points in a matter of one day. The range is so big. When you see a range bound market, generally the range is, much smaller. This is 40-50 points range. But when you're seeing high volatility, the range itself is 100 points. So obviously a movement getting out of this range will also be more substantial. Personally, if I see that these are the movements which is happening, it goes about 11,750. I would probably not be participating unless I see that in intraday today it moves around sideways. Number one. Number two, a lot of stocks participate with it. And number three, if there is some movement below this range first during the day, because I don't want to get sucked into volatility. Now, if I become so conditional, I have to be free flowing as a trader. I can't be too conditional. And so if I happen to become so conditional, it may not be something which is very healthy for me. Maybe something happens during the middle of the day. So my formula would be to wait and watch. Now we don't see on SGX chart there is absence of this data where price came down. But what we do see is that yesterday's movement, this is what yesterday's movement looks like. And after that, the price showing us higher high and small subtle movements again on the upside. So if I see something like this against a larger trend which is not strongly poised, it is showing me that maybe this breakout is not a breakout. There's no pattern. It's just a corrective wave which is going on. It's just subdivided. And there are higher chances in the next few days or even today if that situation occurs. that we continue with this strong bearishness. And another one chance is for the sideways movement to continue. All these three scenarios kind of, it's easier in these markets to come down to three classical scenarios. Out of all these, one of the best scenarios to actually have, which I feel the market, the price movement demands, and it will be good for us also, is if the market completely becomes sideways for today again. It will give more room for a lot of stocks to recalibrate their dominant trend, and the stocks which are showing specificity, there is bearishness. Another scenario which would be good would be to see market opens, starts dumping down. Later it becomes sideways then and then continues, that's a different matter, but starts dumping down. Because there will be a lot of stocks. So one of the things in my list is PSU banks. PSU banks. So I will take particularly SBI, PNB, Gyan Bank. Now looking at the chart of these stocks, today I have on purpose not put RSI because the charts are so profound, the high volatility. I wanted to keep it just the chart without any indicators. We are seeing on PNB that the long-term weekly chart is down. And not only down, it is making lower lows in the recent past also, like this one. After it has made a lower low, it has retracted and consolidated a little bit. Coming back to daily chart, there is a formation of a pattern which resembles a descending triangle. Of course, it would have been a full descending triangle if this was a little lower, this was a little lower, but I'm not getting to that. Resembles a descending triangle. And after that consolidation, we're seeing further down moves, which is most likely to say that yes, number one, we could make new lows. Number two, that if this is a corrective move over here, and this is a wave one, this is a wave one of, this is a wave two of, this is a wave three of one, one of three of one, two of three of one, and these could be parts of three of threes, which would mean significant down moves. Maybe some news is coupled around with the budget, right? After a few days after the budget also. Maybe those occurrences may happen in the market, which would aggravate volatility. And the PSU banks are showing me that this is such a scenario, which is very, very likely. Now, PSU banks, let's look at banks in general, not just the PSU bank, let's look at banks in general. So for example, I go to Bank Nifty stocks. Start with Axis Bank. This was again on our list yesterday, where there is distribution on the daily chart, a big one. Keep moving forward. Bank of Baroda. This was the first chart I pulled up yesterday. You see, somebody who's trading the first 60 minutes, first 15 minutes, first 5 minutes, one cannot go on picking full, making most of their movement unless they are ready to see the volatility going against them. The volatility or variance, the movements on up or down, whichever direction you are trading in, even the opposite of that, both of them will exist. Higher up and down, higher standard deviation. So you have to endure that in order to take these trades successfully. And if you're not feeling that, okay, no, this is not something I want to do, I want to book a smaller profit, even though it is not the full day, it is still substantial. Book it, no problem. Book in parts, have trailing stop loss for another part, things like that. But one thing which you don't want to let yourself do is to lose money when you've already made the money. Okay. Now it's always about the markets. It's never about the money. But the thing is, money management being an important part. Just imagine you're a cricketer. Okay. Just imagine you're a cricketer, and there is your best style of batting is shooting the ball which comes from a spin bowler, and you hit the sixes and you hit the fours. But you are not very good at playing when it comes to the fast-paced bowler. You are not very confident in hitting a big shot. Somebody else may come and say, hey, look at the markets. There's so much opportunity. Did you sell or not? Did you make any money or not? You're a trader. You are knowing technical analysis. Did you make any money or not? These are things which confused me to the core. Because as somebody who professionally knew this and professionally practiced this subject, I was expected to be doing very well on a day like this. But then I realized when I looked around and spoke that yes, there are many professionals who do very well, but there are many professionals who get caught up. There are many professionals who don't do anything on this. It is basically no single set rule. There is nothing which is supposed to be done because you need to validate. So, one thing which I figured out that on a day like this, if I'm not somebody who likes to take the shot at a fast ball, somebody may say, like, you just flick that ball a little bit and it will go for a four. You should have taken that easy shot. But hey, no, the fastest ball in the world was there. And I'm not good at fast ball anyway. So let me play defensive. Because to make more runs, I'll have to wait for the next over to come. And I feel if you are, see, there are different people over here. Somebody who was in the 2015 match, somebody who was in the 2019 and 20 match. Okay. But if you feel whichever state of evolution you are in, if you don't think you are happily and enjoyably and in a smooth manner playing the fast ball, if you don't think you're doing that, then I also suggest you wait for the next over. This is the basic trading wisdom which you need to have. Without this, becomes difficult. Getting the point? Because it can take in this volatility wrong decisions, one wrong decision here and there to spoil things. You don't want to spoil things, right? You want to be understanding of your own nature and the nature of the market. So we saw PNB, RBL Bank, SBI, Yes Bank, Axis Bank, Bank of Baroda. We have things like Federal Bank. Again, it did not make new highs. It's time to come down. HDFC Bank, to some extent, it may pull back. To some extent, it might just show us gains. There's a short-term support zone. Let's see how it performs. ICICI Bank. Again, cutting through all of this movement. IDFC First, all of them have been poised strongly bearish recently, which we see from the look of it. More of the PSU banks are bearish considering yesterday's move. If this tends to be continuing, then obviously it brings a lot of downfall for the bank nifty. Again, bank nifty has also been a 90-degree move. If you are an intraday trader, let it recalibrate its volatility so that it can be either poised to go down or up in one direction. And there will be some weeks and some days like this where you have to wait for the price data to gather. Many people ask me, sir, you teach so many people, they're doing well, and you're also trading. But how do you manage sideways market? Believe me, I had that question too. But the answer to that question is you can't be too specific about exactly what I want from the market. You can't be too specific about it. But you can be open to what the market is ready to give you. And if within the periphery of your objective thinking, certain moves come, that will be on your radar. Let me give you another example. Suppose you look at normal non-volatile markets. These are all the moves happening. And each move can make you 1000 rupees. Okay, there are a lot of moves happening. Each move can make you 1000 rupees. Suppose there are 50 such moves. Maybe in your objective periphery, no matter how good you are, no matter who you are, maybe only 15 such moves out of 50 come under your objective periphery and you make around 15k. You have the potential to do this. You might make a 3k, 2k, 5k, whatever, but you do this. In case of a volatile market scenario, especially in the phase which may be going into, which is more confusing than even the volatile market scenario. That is, we may be going to a consolidation after that. Me coming and talking to you every day, somebody in the television coming and yakking about, I'm expecting this, the market can do this, the market can do that. All that is not going to matter at all. In the end, the market will do its own thing. Nobody will be right. We can't be too preemptive. But in this objective periphery, why it becomes more confusing for people is that they see all the moves in the market. So firstly, if there are 50 such moves, they look at the market and they say, okay, 15. But unlike this, which 1k per 50, 1k per move, this has the potential to make or lose 3k per move. And the market sucks people in regret aversion. And what is even again worse is that maybe you sort out 15 moves in your objective periphery, you will probably sort out 10 moves in your objective periphery, and that too after a lot of difficulty. So this may be 10. Out of that 10k, which is the potential, you may be pulling out 1k or 2k if you execute very, very well. If you can do this much, expect this much, maybe you get more. But don't try to match the same ratio which was there earlier. There will be a mismatch. Are you getting the point? How many of you just understood what I said? Because just give me a fresh raise of hands. How many of you just understood what I said? This is how the short term will behave in such a market. Thank you. And sometimes there will not be certainty around. So, we have sat together for 10 days. There will be phases, 10 or 11 days, I don't know how many, but something like that. We have done this for so many days. There were days, a lot of stocks pointing to the same direction. Seems like a power steering, makhan ki tarah. And now you see that there are chances this and that and that and this. It's not because of what I want the market or how many trades am I looking at. It is just about what the market's general notion tends to be. Just like we find that there's a strong trend present, the strong trend leads to continuation of the strong trend. Similarly, we have historically seen the nature of volatility and its outcome. So when the nature of volatility over here showed us some outcome, it moved around for about 5-6 days like this and then continued. So, I can't be on day one or day two over here and look for trades when Nifty will move 500 points. No, I can't do intraday. I can do only how the price is developed. So keeping that in mind for those, because dominantly we are looking at Nifty, Bank Nifty first, dominantly. At least it's on our radar. This will be the general nature. So if we see the scenario, we have to act accordingly by doing nothing at times. Name the point. So let's take the stocks, other stocks. So PSU banks, one list. What are the other stocks? I've been looking at the steel sector, and I continue to see more bearishness is only continuing. This is one sector I would like to continue looking and keeping an eye out on. But again, it matters that that there is some intraday consolidation. There is something which shows me some bearishness. Until then, I'll just keep it away on my radar, but keep it just like that. In volatility, you have to keep broader aspects in mind. And you have to give room for the market to move, because during the day something big can happen. Infosys, it had been step by step up move, and now we see that all the IT companies yesterday started giving back their gains. IT companies started giving back their gains. So one of the discussions we had was there were certain things with IT companies all going on after the budget or during the budget catching fire. But then in the short term they resumed downtrend. One more example of why you should not just plain simply trade on news. Because until the price structure is not supporting it, new lows can be made. So for that reason, obviously not all IT stocks, Mindtree regained its momentum. It's been a weekly uptrend. Okay, daily uptrend also. So I'll take IT stocks again as more of the bearish ones. My number one pick would be HCL Tech. Reason being, I saw a long-legged doji over here. Now this is not exactly a doji, needs the open and close needs to come, but it has got equal and long, almost equal and long wicks. These represent to me a stability in volatility. And then now again yesterday shows that there is a big lower wick. Potential of bearishness. Now candlestick is the flow, and if I see structure in the smaller time frame along with the flow, I can possibly see it fall further. Okay. UPN. Again, we've been speaking about this stock. This has been on the radar. Not spend too much time on it. Okay, but just keeping it on the radar. Then we've got certain stocks which have been extremely bullish. So we've got Hindustan Unilever, Bajaj Auto. Now the reason why I'm taking up this stock is because they are very close to the 52-week highs. And if market is likely to go up, okay, when I say go up, doesn't have to mean it has to go up 1000 points, but it has to go up, show some degree of bullishness. Something which is at the, at the track of going at a higher speed, such that it is going towards a 52-week high. You can imagine. Suppose there are different teams which are running a marathon race. There's a red team which is wearing red t-shirts. There's a blue team which is wearing blue t-shirts. And if the match is going to be won by the blue team, this is likely that the best racer, the best runners of the blue team, they will come first in the marathon. That is why the blue team will win. And the aspect of breadth, although similar in what we have discussed or known, but the aspect of breadth will present itself differently in such a situation. Number one, volatility. So the contribution of something volatile will be big. Getting the point? And the contribution of something volatile. And I'm giving each one of them, I'm not talking about, let's say, intraday chart, this is the pullback. No, I'm not saying all that. Why? Because with the volatility, I need to give market some more openness, some more breathing space to show me some things. And if there is volatility, just imagine what is happening. There is volatility because of what? Just tell me, can anybody tell me? I want answers. I know everybody can answer this question. Why is there volatility? Fundamentally, like basic reason why there is volatility. Because of what reason? Basic reason. Why do prices move in one direction? Because of participation? Agreed. Because of activity? Agreed. So when there is too much activity in the market, right, Gaurav? Because there's continuous demand supply from the participants. So what happens is when there's continuous activity and at a higher pace, just like in the morning market, sometimes you will see the technical analysis can be very clear, even on a 5-minute chart, 2-minute chart in the morning markets. And doesn't mean that you have to be aggressive because morning markets are volatile because there is a higher participation in morning markets. And because all that is there, literally you can say that the price is moving at a higher speed. So fresh pattern developing in the first half an hour and then the movement happening is also possible because the market is actually moving worth a normal day of 2 hours in a matter of half an hour, something like that. These subtleties of volatility, some of the things I've gained from experience, some through reading, some through other people's experience. These are subtleties of a phase of market. So if you are a batsman and you are facing Harbhajan Singh, you know the subtleties of a spin bowler. If you're facing Shoaib Akhtar, you know the subtleties of a pace bowler. You need to know the subtleties in order to play well. Especially if the other bowler is in complete form. And if you're not in form, then definitely defensive. So there are going to be opportunities. Some of the most defensive times you're going to just go for a sixer. But it will be where the market is showing you movements. So right now, give it some space to breathe. So let's put on our radar certain stocks which come and I'll put just add Wipro over here. So all of this, more of the bearish ones. Then I'll go for the more bullish ones. Okay. There will be other stocks like a Pidilite or Escorts, which are super bullish too. You can keep those on your radar also. And yesterday, what we discussed, just see the nature of markets. Yesterday, what we discussed, everything pointing towards one direction. I also did not want to be preemptive about a higher chance or a lower chance. There could be a pullback, there can still be a pullback, but you don't want to be too predictive and you want to just let the market show itself to you. Yes Bank can be a very good short trader, can be a very good stock for it. Yes Bank is a great example of higher volatility. How many times, if you just sit and take a look at the 15-minute chart, just take a 15-minute chart and sit with Yes Bank for the last 10, 20, 30, 50 days, just see what has happened. You are likely to see how amazing moves can come just by reading a 5-minute, 15-minute chart on an intraday basis. You're likely to see that. Why? Because higher volatility means faster participation, faster move. You're likely to see that. Of course, there will be sideways days, etc. here also. But when there is higher volatility, it means more movement. Where does it start? It starts with the smaller time frames. So you have to understand and take a feel of all these things. Once done, can be extremely advantageous. Now, certain, as I was saying, like what happened with L&T, it gave us a strong fall later. So, in amidst the market going up before this, there were certain stocks which were showing us pullbacks, like the cement sector we see. They were actually pullbacks in a long term or a medium term downtrend or a sideways trend. So those stocks have started to show us again corrective movements. Won't count on this much as the others, right? So need to let them settle down and see where it goes later. Look at Apollo Hospitals. Look at Apollo Tires. This entire movement which was just a pullback in an overall downtrend. Now, auto ancillaries are not going hand in hand. There will be different aspects. One thing is the Asian Paints, another stock. heading towards lifetime highs on the weekly chart. On the daily chart, a superbly bull movement came yesterday. Even on intraday basis, it had continuation patterns. Superbly bullish movements. Completely worth it to keep on radar. If we look at the wave counts, potentially this could mean that we have completed an ABC, just making a lower low, which is like a regular flat. And after this regular flat, we are going for another continuation. Yeah, similar thing with escorts, but here I'm seeing something really nice and fresh out of 52-week zones as well as supported by structure. And again, this is a strong move. This is highly strong, but it's also a volatile stock. So maybe you see some intraday patterns continuing it today itself, maybe a few days later, but worth it to keep on radar. Asian Paints. Oops, sorry, 1 second. Worth it to keep on radar. One second, guys. Why is this closing again and again automatically? Yeah, Berger Paints. Similar to that, regained its up movement. Things like Jubilant Foods regained the up movement. And we have been tracking Jubilant Food from here, those who are in the recent batch, from these levels. Those who were in the previous batch, we have been tracking Jubilant Food for quite some time in different ways. This is the movement which started during its last, I think, last quarterly result. This was the movement. Then came up huge consolidation. Now, this is where technical analysis helps you. When this has come to a 52-week high, I've heard so many people talking about fundamentally, this is overpriced, overpriced, overpriced. It is going above 52-week high. It's a weekly strong uptrend, and it has got price structure to support it. It has got a huge double bottom continuing or a cup and handle continuing. It's got a lot of elements. And there's a consolidation right above the resistance. I'm seeing that this is breaking off. I still see people saying it's overvalued. It will get competition from Swiggy, Tiggy, Piggy. No, even if it gets competition from Swiggy, even if it gets competition from other kind of similar people in the sector, similar companies in the sector, where is the consumption habit going towards? And what is wrong with a Domino's? Suddenly, if the profitability and growth is like that, there can be different takes, fundamentally speaking, on the same thing. You can be right, I can be right at the same time. Maybe later, after going another 100 points up, Jubilant Food just starts going down. Who knows? But that's not the point. The point is, where there's a trend, you follow the trend. And if you followed this trend, then this has been a highly gifting stock. And you need few trends like this during the year to have some of those few big swing trades. Bharti Airtel. Again, day one we spoke. IGL, MGL, Bharti Airtel. Now we see this stock towards, nearing a monthly, on the monthly chart, a huge breakout could happen, and at the same time, you can see it is heading towards the lifetime highs. Very strong trend, super strong. Huge in volumes. These are the weekly chart volumes. Just look at this. So you want to keep this definitely on your radar in case something big happens. This is one stock. There has been a cluster of candles over here. Some of them look like hammers. Okay, yeah, against a short-term downtrend. So we can see further, maybe some resistance taking and then further up move. Just keeping it on my radar would be good. As I said, I need to give more room in these cases. So guys, I think we have done for the list for today. Nifty and Bank Nifty on my more of the, you know, oops. Nifty and Bank, but keeping room and keeping eye on for both kinds of things. Until then, until we see how this unfolds, let's not be too preemptive. Let's keep stocks on radar. Let's give market some space to breathe. Let's play a little defensively if needed, but be aggressive when the opportunities come, especially in intraday. All right. On that note, we will take another this thing. Oh, Rahul, I just read that message. Congratulations. Congratulations. Wow, that's a great news. I don't know, but I just read the message, opened the message box. Thank you. So, guys, thank you all. And congratulations, Rahul, for having a lovely baby boy. God bless him and your family. Take care, guys. Thank you very much. Thank you, Nitin. Thank you, Rahul. Thank you, Gauranji. Thank you all. I'll see you tomorrow. And just to make everybody aware of this, if you have missed out,